Hey folks, Dan Frio here. Today we're going to talk about down payment. So if you've ever asked somebody, or you went online, or you watched YouTube or Facebook or everything, you're probably going to get 100 different answers on how much money do you really need when it comes to buying your first house. So that's what we're going to dissect. But before we get there, I'm going to give you a little educational tool to explain to you, where did the 20% down concept come from? So let's get to it. So the first thing we're going to talk about is, where did the 20% down come from? Well, in 1930s, or back way in the way heydays ago, if you were looking to buy your first house, you'd have to put a chunk of money down, and then you could get a mortgage, or I'll say, I'd take that away, not a mortgage. You could get a loan to finance that house for a couple years. That was it. Okay. But then in 1934, FHA came along and they said, you know what, we'll help you finance a property. And at this point, you only need 20% down. There's the 20% figure that came out. That was the first basically home loan product out there. Okay. And then 10 years later, in 1944, the VA came and they established the VA loan. At that point, if you were to get a VA loan, you would need 50% down. A far cry from where we are today. And not until 1948 was the 30-year fixed rate actually even invented and approved it with Congress. So now let's go to each loan program type to break it down to see what you qualify if possibly. So the first thing we're going to look at is FHA. Why? It was the first mortgage product ever invented, or first home loan ever created. So FHA, that's what we're going to talk about first. Another product is VA. That was the second one established. And then we're going to talk about USDA. Those are for rural properties. And then we're going to talk about conventional. That's the mortgage program that mostly everybody knows about, or at least they think they do. The first piece of the puzzle is FHA. How much money do you really need as a down payment if you're looking to do FHA financing? And that's what a lot of first-time homebuyers do, because why? Well, if you have a credit score of 580 or more, you only need 3.5% down, a far cry from the 20% you needed back in the 30s. Okay. But did you know that FHA will do a loan all the way down to a 500 credit score, but you need 10% down? Okay. So that's the programs, or that's the down payment requirements by FHA. The next piece of this puzzle is VA. Why? It was the second home loan product created. VA today is a far cry from where they used to be in the 40s when they required 50% down. And today, if you're a veteran, you earned it, God bless you, you don't need any money down. You can finance 100% of your house's value. You normally need a 580 credit score or higher to qualify for these programs. But again, VA will finance 100% of your mortgage, so you don't need any money to put down. Another product that has the same kind of guidelines, especially when it comes to the down payment piece of the puzzle, is USDA. Okay, USDA will do 100% financing, no money down. There's two pieces of the puzzle that you have to qualify for a USDA loan. One is the property has to be USDA approved or in a USDA zone. You can find that by visiting USDA. And the other one is there's income restrictions, and they vary by location. So the one thing I can do is I'll put down the description below all the USDA links so you can look it up on your own. The next piece of this puzzle is the conventional financing. Conventional financing is basically the program that most people know about. But what you don't know about is there's two entities out there right now that approves mostly all of the conventional financing. It's the programs I use. If you're going with Chase Mortgage, Wells Fargo, Citibank, Guaranteed Rate, Quicken Loans, anybody, we all use Fannie Mae and Freddie Mac. Okay, so that's a little confusing. Continue to watch other videos that I have, because my goal here is to educate and inform you guys everything real estate, especially when it comes to the financing options. So there's two entities out there, like I said, Fannie Mae and Freddie Mac. They each have a first-time home buyer program, and those programs only require 3% down. So Freddie Mac has a program that's called Home Possible, and Fannie Mae has a program called Home Ready. One of the things that most people think is you have to be a first-time home buyer to qualify for these programs, and you do not. Normally, in most cases, you only have to, here's the guideline, and this is kind of complex a little bit, not that hard. You cannot own another piece of property at the time that we close on your current home that you're buying with this program. So meaning, if you have another property, even an investment property, you can't get into this program. Okay. Or if you have another property that hasn't sold prior to closing on this property, you can't get this program either because you currently own a house while you're closing on the new house. So hopefully that clarifies that. Both of them require a 620 credit score. And the one big caveat here where most people don't qualify is you have to be in the range of 80% of the median track income for your area. So hopefully now you understand why so many people think that you need 20% down. And now you have the truth. How much do you really need when you're looking to buy your first house? So my name is Dan Frio. I do the rate update every day. If you'd like to find out more about me and my team, all you have to do is visit us on the rateupdate.com. Some other great information out there is my team is now federally chartered. What that means to you out there, no matter where you are out in the US, we'd be able to help you, including Puerto Rico. So to find out more, visit us at therateupdate.com or check out our YouTube channel, The Rate Update with Dan Frio. Please make sure to subscribe and give us a thumbs up. Take care, guys. Look forward to seeing you next time. Bye-bye.